Hello, everyone. Today, we'll break down the main assets of the commodity market, take a look at the current situation, and highlight the key points that I hope will help you make well informed trading decisions. Let's get started. And today, we'll start with silver. On the daily chart, the levels and trends remain relevant. The price continues to move within a downward trend and has now tested the broken level, which previously held the price from falling several times. Selling volumes are prevailing, and for now, the scenario for a decline is playing out. As I mentioned in the previous episode, I still consider a price drop toward the $50 range to be the main scenario. For now, I'm sticking to this plan, and once we reach $50, we'll assess the player's efforts and set the next targets for the asset. But if the asset continues to move sideways, then most likely we'll expect it to approach the upper boundary of the channel and eventually break through it. But it's too early to talk about that because the buying volumes are still very small. And this amount, they can't change the direction of movement. Now, let's turn to the hourly chart. The smaller scale also confirms my assumptions about the further decline in the asset's price. But there's one thing that bothers me. The price has approached the local minimum several times already. Let's mark it. And it can't break through it, even though the selling volumes are increasing. Accordingly, we'll highlight this level as key for the further development of events. If the price breaks through this level and consolidates below it, then I will expect the price to continue falling toward the $50 target. But if it holds, we'll see the sideways movement continue. So, for those who are in long positions, let me remind you that the asset is in a downtrend and has also broken through an important lower level. I can't say anything positive about your position. The only thing that could save the position is if the price continues to move sideways and breaks out of the downtrend. And for those in short positions, the situation here is simpler. The price is in a downtrend, and a further decline in the asset's price is much more likely. Next, oil. On the daily chart, in the previous episode, I pointed out the price slowdown when it reached the historical gap and expected further growth to test the broken level, which is basically what happened. But as of today, I can't really call this a test. The price has exited a prolonged downtrend. Buy-in volumes are increasing, and it's quite likely that we'll see further growth of the asset. But I can't say that with confidence. It's precisely at this level that we need to watch the players' next moves, which will reveal their further intentions regarding the asset's movement. A return of the price to test the upper boundary of the channel is also quite possible. I'll refrain from making any graphical predictions. Next, let's move to the hourly chart. Here's the confirmation of the previous scenario. Everything went very smoothly. In the current situation, the price has approached a key level in the range of $87.50, and some pretty strong selling has appeared. The buyers are holding off this pressure very well, not letting the price drop significantly. So for now, it confirms that the players intend to push the price up. But when will this happen and from what level? I think a pretty realistic plan would be to wait for liquidity to be taken out below the local lows, after which the asset could shoot up further. But considering the situation on the daily time frame and the possible test of the upper boundary of the global downward channel, the move down could be deeper. I'll note the local downtrend for myself and my graphical expectations. So, for those who are in long positions, overall, the situation is on your side. The price has broken through the global downward trend, but pay attention to the price range at $82.50. I think that's the nearest level where the price could return. And if it doesn't hold, then you should expect a further decline to $80, after which the price will most likely continue to rise. And for those in short positions, you can only consider short-term trades at the 82.5 and $80 levels within the local downtrend. A breakout above this trend suggests further growth of the asset. Next, gold. Looking at the daily chart, since the last review, almost nothing has changed. The movement remains within the downtrend. The price keeps fluctuating around the round level of $4,000 and just can't break through it. For now, sellers are still leading in terms of volume. They've been putting on pressure for several weeks now, but there are no results. Therefore, I can assume that the price will continue to move within the triangle, and a breakout from it will determine the further direction of movement. In my opinion, the best scenario would be an exit from the downtrend and the start of new growth. But what will actually happen? Only time will tell. Looking at the hourly chart, in the previous review, I assumed that after breaking above the current high, the price would continue moving toward the range around $4,200. That's exactly where it went, after which selling resumed. It's hard to say what's happening in the current situation. In the last upward move, there was a large amount of buying, followed by about the same amount of selling. But the results of this move are worse. I think everything will only become clear after one side or the other shows some effort, and then we'll be able to assess it. I'll refrain from making any chart based predictions. So, for those holding long positions, don't forget that the price is in a downtrend. These are already significant risks, but considering that it's being squeezed toward the upper boundary, we can assume that further price growth of the asset might be expected. And for those in short positions, the situation is also uncertain. You can only count on the continuation of the move within the local downtrend. Let me highlight it. Next up is Palladium and its daily chart. The price has exited the global downtrend and is attempting to consolidate above the level of the previous effort. Recently, buying volumes have been increasing, which could indicate a continuation of the upward movement or the beginning of a sideways trend. For now, with the price at this level, it's too early to say for sure. Moreover, it could return to test the upper boundary of the channel. Earlier, I mentioned that I see the global target for this asset in the range of $1,000. If the upward movement continues, we can forget about that target. Next, let's look at the hourly time frame. The price is stuck in a sideways range, and a breakout from it will indicate the asset's next targets. If the upper level, which is at $1,300, is broken and the price consolidates above it, then I'll expect further movement toward the $1,350 target. However, if the price falls back below this level, it's possible we'll see a return to test the upper boundary of the global downward channel. Judging by the volume and price direction, I consider the most likely scenario to be a rise in the asset's price. So for those who are in long positions, at the moment, all the indicators are on your side. The price breaking out of the global downtrend and overcoming the current level shows an intention to keep pushing the price higher. The only thing to watch out for is a return of the price to test the upper boundary of the channel. And for those in short positions, only a move back below the level will give your positions a chance for success. Well, that's roughly how I expect things to play out. But if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future updates. I hope this was really helpful. And don't forget, we make assumptions, but the market decides.